What's going on, everyone? We're going to talk about pegging. No, not that kind of pegging. We're going to talk about the rule filing peg orders from SRIEX 2021-17. Golly. What's going on? So, peg orders. Reintroducing peg order type to the IEX exchange. This was proposed on the 16th, I believe, and it got published to the Fed Register today, or it's scheduled to be published tomorrow, but it's sitting there under public inspection today. So IEX is filing this rule change proposal to reintroduce a market maker peg order type. IEX previously had a market maker peg order type, which it retired in 2020 because at the time there were no exchange registered market makers. I didn't know that. As described below, IEX's proposed new order type is almost identical to its original, commission approved, market maker peg order type, with the exception that the new market maker peg order will have tighter quoting spreads than are required by IEX rule 11.151. IEX Rule 11.151, a little bit of background, which is called market maker obligations, requires market makers for each stock in which they are registered to continuously maintain a two-sided quotation within a designated percentage of the national best bid, or NBB, and national best offer, or NBO, as appropriate. The market access rule requires a broker-dealer with market access, or that provides a customer or any other person with access to an exchange or alternative trading system through use of its market participant identifier or otherwise, to establish, document, and maintain a system of risk management controls and supervisory procedures reasonably designed to manage the financial, regulatory, and other risks of this business activity. These controls must be reasonably designed to ensure compliance with all regulatory requirements, which are defined as all federal securities laws, rules, and regulations, and rules of self-regulatory organizations that are applicable in connection with market access. In addition to the obligations of the market access rule, broker-dealers have independent obligations that arise under Regulation Show. Regulation Show obligations generally include properly marking sell orders, obtaining a locate for short sale orders, closing out failed to deliver positions, and where applicable, complying with the short sale price test. While there are certain exceptions to some of the requirements of the Regulation Show, where a market maker is engaged in bona fide market making activities, the availability of those exceptions is distinct and independent from whether a market maker submits an order that is a market maker peg order. Now, what is bona fide market making? This is another generally misunderstood concept. Is all naked short selling abusive or illegal? When considering naked short selling, it is important to know which activity is the focus of discussion. Selling stock short without having located stock for delivery at settlement. This activity would violate Regulation Show, except for short sales by market makers engaged in bona fide market making, because market makers engaged in bona fide market making do not have to locate stock before selling short, because they need to be able to provide liquidity. However, market makers are not accepted from Regulation Show's closeout and pre-borrow requirements. So again, naked shorting is allowed if liquidity is needed. Now, the proposed rule, the exchange is proposing to, again, reintroduce an optional market maker peg order type, which will be identical to the previously approved order type, with the exception of the tighter quoting obligations. The market maker peg order type is designed to simplify market making compliance with the continuous quoting and pricing obligations in IEX Rule 11.151A in a manner consistent with the compliance with the market access rule and Regulation Show. Now, the market maker peg order as proposed is not only almost identical to IEX's previously approved, it is substantially similar to equivalent order types offered by other market centers. Now, the market maker peg order would be limited to registered market makers and would have its price automatically set and adjusted by the system. Hoorah! Both upon entry and any time thereafter, in order to comply with the exchange's rules regarding market maker quoting and pricing obligations. Proposed IEX Rule 11.190B17A defines the market maker peg designated percentage as 8 percentage points for all securities except that between 9:30 a.m. and 9:45 a.m. and between 3:35 p.m. and the close of trading. The market maker peg designated percentage shall be 20 percentage points. IEX also proposes to incorporate a tighter quoting structure for market maker peg orders. in order to simplify technical complexities in the design of the order type associated with treating all stocks equally. Aw, diversity. Now, moreover, IEX believes that tighter displayed quotes could help to increase access to display liquidity being posted by IEX market makers. So what are they doing here? Basically, they're going to be, in a nutshell, expect more bona fide market making activities because, again, there's no liquidity in the market. And when you have something like naked shorting that adds liquidity, I would almost expect more of that to continue. Now, market maker peg orders, like all incoming orders, will be subject to 350 microseconds of inbound latency from the IEX point of presence, or POP, before reaching the system. Now, as far as implementation, the exchange plans to implement the proposed change in December 2021 or January 2022, subject to the effectiveness of filing with the Commission. The exchange will announce the implementation date of the proposed changes by a trader alert at least 10 business days in advance of such implementation date and within 90 days of the effectiveness of this proposed rule change. So let's see what happens. There you go. Have a good one.